All right, it is Monday, May 4th, and this is a look at the Altos Research US real estate data that came in over the weekend, the real time analytics. As we roll into May, we can see the whole month of April now, and it sure feels like it finished strongly. Home prices climbed up again this week to 329.9, the highest point of the year. After that initial March recovery down, April was up 1.5% over March. Normal Aprils are the strength of the spring selling season and have been up 3 to 4% prices in just the month of April in recent years. So you get most of the year's gains in home prices in April. So you can see in the data here the haircut we took at the onset of the crisis. So we're down 1.5% year over year instead of being up a couple percent. But April finished strongly. For inventory, new listings are inching up week over week. We had 51,500 or so new listings hitting the market this week. This is super low, of course, but there are signs of a decent amount of inventory being able to hit the market in May. So signals that inventory will be able to climb a little bit and transaction volume to climb a little bit. In some states, including California, loosening restrictions around the market, and the market sure feels like it's absolutely ready for it to happen. We're at 738,000 single-family homes, so it's super low, lower than last week because of absorptions are outpacing new listings at this point, but May looks like we will see that starting to open up just a little bit. One thing we're going to be keeping an eye on is the 3.5 million mortgages that are currently in forbearance. These are the suspended payments that consumers negotiated at the onset of the crisis. So those were initially 90-day deals, and they'll expire at the end of June. So we will likely see some transaction volume around that. People will obviously figure out how to hold on to their homes, and a lot of people have equity, so they're not all going to blast onto the market, but they may give us some more buyer opportunities, transaction opportunities at that time. So we'll keep an eye on that as we get closer to the end of June when those deals expire. As far as leading indicators for pricing goes, Altos tracks percentage of homes on the market that have taken price reductions. And what's been fascinating this year, and actually very bullish, is how few of the homes on the market have been taking price reductions. This is an indicator, one of the best indicators of the underlying organic levels of demand. The price reductions are a strong wisdom of the crowd signal. The sellers and the listing agents collectively know exactly where the demand is. And if it's light, they start cutting prices. The way the seasonal action works is homes come on the market in the first quarter. We peak market transaction at the end of June. So normally at this time of year, we're starting to see a few price cuts, people that want to get ahead of the market. And we see price cuts climbing week over week. We're not in normal times, and price cuts are actually reducing. So where our absorption volume is outpacing our new listings. So we're having fewer homes on the market, and mortgages are super cheap and getting cheaper. So these are bullish signs for transaction prices in May June, and July. We've been doing these videos every week. I invite you to subscribe to the Altos Research channel on YouTube to make sure you don't miss them. We are doing a webinar, full webinar tomorrow, Tuesday, May 5th, for our agent and real estate professionals and enterprise customer base. You're welcome to join. I will put a link in the comments and in the description at the bottom of the video. And if you miss it, the recording will be here on the Altos Research YouTube channel. Talk to you soon.